Hello everyone, welcome back to Nova channel. And let's continue the new topic together. Limit your risk, secure your reward, trading with proper risk-reward ratio. Have you ever asked yourself, why do I win 7 out of 10 trades and still lose money? That's not bad luck, that's a bad risk-reward. In trading, it's not just about how often you win, it's about how much you make when you win and how little you lose when you're wrong. Today, let's break down how to limit risk and secure a proper risk-reward ratio, so every trade becomes a part of a consistent long-term plan. Let's break down the first part. What is RR and why it matters? RR stands for risk to reward ratio. It simply compares how much you're willing to risk versus how much you aim to gain. For example, if you risk $100 to potentially make $300, your RR is 1-3. Many new traders focus only on how right they can be, but professional traders care more about, when I'm right, do I win big? When I'm wrong, can I survive and try again? Even with a 40% win rate, if your average RR is 1-3, you can be profitable. It's not about being right often, it's about making the right risk-reward decisions. Okay, so let's move on to the second part. Common mistakes that destroy RR. Let's go through the most common mistakes that ruin RR and how to avoid them. The first one, stop loss too tight just to enter the trade. Some traders bring the stop loss just to fit a pretty 1-3 RR, but that's unrealistic. A good stop loss needs to be placed at the technical validation point, not a random tight zone. And you can fix this mistake by setting your stop loss based on the market structure, like below support, above resistance, or beyond the supply-demand zone. And the second mistake is forcing TP to get 1-2 or 1-3 RR. Don't just set your TP to make a math look good. If your TP is placed beyond the realistic levels, the market may never reach it. And how you fix that is setting TP to align with next key levels, Fibonacci targets, or previous liquidity zones. Let price tell you where is it reasonable. And the third mistake is not knowing risk per trade. If you don't calculate your percent risk per trade, many traders risk $50 on one trade and $300 on another without even realizing it. And how to fix it? Let's just decide how much percent of your account you will risk, usually 1-2% per trade, then back calculate your position size accordingly. And now let's move on to the next part, a simple framework to manage risk-reward effectively. And here's a simple 5-step framework you can apply immediately. Step 1. Define technical setup first. Look for valid confluence, trend, support, resistance, candlestick, pattern, and so on. Step 2. Identify logical stop-loss level. You should ask yourself, at what price level could the setup be proven invalid? That's your stop loss, not too tight, not too loose. Step 3. Measure reward based on structure. Don't set TP blindly. Look for realistic targets, the next supply-demand zone, price swing high-low, or Fibonacci extension. Step 4. Calculate RR. Let's say you're risking 30 pips and your TP is 90 pips. That is 1-3 RR. If the RR is under 1-2, considering skipping the trade or reanalyze with tighter structure. Step 5. Adjust position size based on risk. If you're risking 1% per trade and your stop loss is 30 pips, calculate your lot size accordingly. Don't adjust the stop loss just to get the size you want. Adjust lot size, not logic. This is the part 3, and this is the example for you to set up the gold trading plan with a reasonable risk-reward ratio. A good trader isn't just a chart reader. A good trader is a risk manager. Anyone can press a buy or sell button, but it takes discipline to accept a loss, respect your stop, and walk away when the risk-reward is awarded. And ironically, the more you respect your risk, the more freedom you gain in trading. freedom from emotional roller coasters, freedom from revenge trade, freedom to trade another day. Okay, so this is the lesson today. If this video helped you rethink how you manage risk, don't forget to comment RR Ready below and share your favorites RR setup with the Nova Scalper community. And don't forget to subscribe Nova YouTube to receive more useful lessons for you in your trading journey. Happy trading! See you in the next video.